YouTube is 20 years old, and the not-so-new kid on the ultra-competitive media platform block is now being called the new king of all media. In fact, analysts estimate Alphabet's very valuable video platform could be worth between $475 and $550 billion, about 30% of its parent company. Mark Mahaney is the head of internet research at Evercore ISI.
That number should sound familiar to public market investors. That's actually close to what Netflix is doing this year. And Netflix's market cap now is something on the order of over 500 billion.
According to Nielsen data, YouTube's popularity has grown way beyond mobile and desktop devices to TVs, living room screens. YouTube CEO Neil Mohan goes further, noting in his annual company letter the platform's TV set viewership has surpassed mobile and is now the primary device for YouTube viewing in the U.S. That drives engagement, Mountain CEO and President Mark Douglas explains.
So the highest engagement platform in the world is television, meaning more people watch TV a day than do anything else, even drive cars. And they do it for a long time, like 3 hours. But YouTube, they also do that. Like today, I watch TV, I watch the show for an hour, and I also watch the podcasts on YouTube.
YouTube sees about 1 billion hours of watch time a day in the US on both televisions and mobile devices. And most of what YouTube audiences are watching is the extremely cost-effective user-generated content.
We're talking in the multiple of billions of dollars that YouTube is largely avoiding.
Jeremy Goldman is the senior director of content at eMarketer. Despite the savings, YouTube has reportedly paid more than $100 billion to its creators, artists, and media partners in the last 4 years. And all of this content is under-monetized, according to Douglas.
If you look at the amount of video that's played on YouTube and the amount of revenue that generates for them, it's a lot less than, let's say, Netflix generates from the amount of content they have. The problem is user-generated content is great for the consumer. It's not necessarily great for the advertiser.
That being said, YouTube advertising took in over $10 billion for the third quarter of 2025, up 15% year over year. Google's total ad revenue, which includes YouTube, topped $74 billion, up 12.6%. And let's rewind. The streaming platform scored $36 billion in advertising revenue in 2024, some 15% of Alphabet's ad sales. TV advertising is a $150 billion market. In June, Nielsen noted YouTube grabbed nearly 13% of it, up from 6% in 2021. Netflix had 7.5%. Analysts estimate YouTube's total revenue was $54.5 billion last year. And experts see the platform doing more than $107 billion come 2030 thanks to subscriptions. YouTube Music and Premium topped 125 million subscribers globally in March. 1 billion people tune into YouTube podcasts every month. All part of the reason why Alphabet stock has doubled since April 2025. And from January 1st of this year, it's gone up nearly 50%. YouTube also provides Google and the mothership, Alphabet, a wealth of information.
All of that is going to be very valuable to Google as it tries to monetize AI search. YouTube remains pretty much the crown jewel in the Google media empire.
But search competition is still very steep.
The search business has continued to grow 10% or greater, or else people are going to assume that ChatGPT really is eating their lunch. I don't think that's happening, but that'll be the market reaction.
Unlike other AI search engines, Google Gemini mines YouTube's massive video library to train search queries.
And that's something that ChatGPT just won't have access to. That content is basically published primarily on YouTube, and Google has full access, again, both for training the results of the the response to the AI question, literally watching and listening to video with the AI and including the result, as well as just possibly providing you the video, saying, I would also watch this for more information.
YouTube is further harnessing AI to keep eyeballs glued to screens.
The optimization models that personalize and keep giving people content that is going to keep them on platform, that's something that Google is quite good at. And what Google is good at, YouTube by default is good at as well. So a lot of that information, or 100% of that information, is being shared and puts YouTube in a pretty enviable position. 200
billion views on YouTube Shorts is the platform's answer to TikTok competition. Shorts also now integrates with Veo 3, Google's AI model for video generation, with high-quality audio and 4K video.
A lot of people, including myself, think the reason they've raced ahead in the quality of those videos is because they can train their AI models on YouTube content, and no other company in the world has that. No other company in the world can do that.
Google bought YouTube in October 2006 for about $1.6 billion, apparently about $1 billion more than it was actually thought to be worth at the time. It's hard to imagine nearly 2 decades ago, Google could have known the cat video platform would one day have a generative AI video advantage similar to that of Tesla's autonomous driving technology. The EV giant boasts about 15 billion miles of data collected from its self-driving cars. It's the same idea for Veo 3 and YouTube's billions of monthly users.
That's in some ways a little bit of a moat, you could say, for YouTube.
That being said, YouTube is not immune to challenges as it continues to grow.
As the business gets bigger and bigger, it's just hard to sustain premium growth
and adapt to ever-changing consumer preferences.
The truth of the matter is this is a bit more of a mature business that has to find ways to reinvent itself, kind of like a Facebook, as opposed to a company where, the sky is the limit. We basically know what YouTube is, and they're in the optimization around the edges, a part of their life cycle.
For Investors Business Daily, I'm Meredith Heyman.